Alright guys, welcome to another series of ZF Trading weekly updates. So before we proceed, first of all, if you guys have followed my previous analysis and if you have shorted the market last week, congratulations for making some money from the market. So this week I have a little bit more to cover. I'm going to talk about the Chinese data first. I'm going to talk about, all these upcoming events that we have to be wary of. So basically, I'm from Malaysia, and before before I do anything, I'd like to know what are the upcoming events that we have in the week ahead. So as you can see from this screen, we have quite a number of news coming up next week. We have the China news in the morning. We have Europe news. We have GPP news. We have US US news, and multiple different news. And what this means is that next week we're going to have a pretty busy week. So whenever there is news, there's going to be a change of sentiment. A change of sentiment would create volatility in the market, and if you have open position in the market, you have to be very careful. So basically, we're looking at news on the manufacturing PMI. We're looking at news on the retail sales of Australia, the construction PMI, and one of the most important one next week is the non-farm payroll on Friday. All right. So without wasting too much time here, let's get into the charts. I'm sorry, I'm not feeling too well this week, so there's going to be some maybe some coughing during the video. So let's talk about West Texas oil first. This is a US oil. So as you can see that we're actually on a pretty strong retrace, and the market dropped a lot due to tweets from Trump. So for me, this is really weird because you can see that the Irans and all these people, they are cutting the production, and you can see that the production it's still a lot week by week on the Wednesday news. That there is a weekly news on oil. This crude oil inventories. So despite cutting the production for almost maybe almost 3 months or 4 months, we're still seeing a lot of inventory for this on. So I think eventually it's going to hit a point where it will not go down anymore. But for this week, I would say that the decent support for oil is at around 53 USD per barrel. It may further extend down to 51, but I believe 51 should really hold. If 51 breaks, then I think we're in for a ride. So the same goes for this crude oil, the Brent crude oil. It's almost the same as WTI. The decent support level is at 62, almost 63, and the last defense is at 60. So moving into the UK 100. The reason why I talked about oil earlier is because one of I think a few of these companies in UK, they are very dependent on oil. Shell is one of them, and all these indices, they are moved by fundamentals. So fundamentals means that all these companies, they need to do well, then they can push the price up. So if oil is dropping, one of the heavyweights in the FTSE 100, Shell, is going to have some impact, and the price is going to drop, and it's going to pull the index further down. This is just a high level general explanation. So for the UK 100, my analysis is the same as the previous week. As long as 7135 holds, the market is likely to rebound. So in order for me to, be fully bearish on this for this index, it has got to break 7130. 7130. If 7130 breaks, I think it's very likely that market is going to go all the way down to 7,000 and then 6,900. So I am not entirely bearish on the UK 100 yet. I think there is a slight chance for it to go further up, maybe go sideways, but I think eventually it will go down, judging by the MACD of the weekly chart. We can take a peek on the daily chart. So the 7130 areas is still being supported. So let's wait and see what happens next week. Yeah, before I forget, one way to trade is that you can let the price break down, come back and retest this 7130, then you can shut it down from there. So for Hong Kong, if you have shorted maybe 2 weeks back, I think it's about time to take some profit. So what I can see from here is that if we look at a weekly chart, we can see that the strength of the bear is reducing. We start with a bearish engulfing candle, then we had continuation. But what we can see right here is that week by week, the length of the candle is getting smaller. So I think we are about to hit a pretty decent support at the 26698 areas. So in order for us to have higher chance of winning, I think we have to wait for the news on Monday, the China news. If the China news is bad, there is a very high possibility that the market is going to break this support level. Otherwise, I think it's going to go sideways for a bit, or maybe some small rebound before it continue to go down. But we shall see, we shall see. Right now, I would say that you can still make money from short. There is still some distance, but just be a little bit more cautious on the Hang Seng, right? The S&P. So let's talk about the S&P 500. For me, 2732 is still a pretty decent support. If it breaks below, then I think a retest to this 2582 should be pretty possible. But of course, it has got to break the 2632 and go further down. So due to the geopolitical tension, I think the market is still in a risk-off sentiment. Risk-off means that people would prefer to keep the money and find better opportunities at lower price. So you can try to short, but maybe let it retrace a little bit, or maybe if you really want to chase, then just monitor on the first few days of your entry. Because of course, I can say that it's going to retrace, then we can short, for better risk and reward. But if President Trump makes a tweet on Sunday about all the tariff and everything, on Monday it's going to be a bloodbath. It's going to be a waterfall, Then let's move on to Dow Jones. Dow Jones is the same with the S&P. So I think I had this Fibonacci drawn, but I'm going to remove it from this video. So I had some notes here. I think the previous week, if I talk about Dow Jones, I'm not sure, but I did talk about this with a bunch of my friends. The 247 areas, it is a pretty decent support. The 247 areas, this area is a pretty decent support. If it breaks, you're going for a ride. Depending, like in my notes up here, depending on the volatility created by Trump, a break below the 247 is going to quickly send the market back to the 23500 areas. which is somewhere around here. So I think, for me, I personally think 24,000 points is going to be a pretty decent support, unless you're going to have all the bad data, the bad manufacturing PMI next week, non-farm payroll stating that less jobs are created this year, then we are going to go all the way. But I think 24,000 will put up a fight. So let's see what happens in the upcoming week. So I've covered my updates on the indices, and pretty much as usual, thank you for watching, thank you for joining me in this journey, thank you for all your support, and if you do like my content, please feel free to like or subscribe to this channel. And as usual, before I conclude this session, please feel free to take a look at my friend's page, the KRSE Lion. Please follow. I think it's going to be beneficial for you. In a week or two, I'm going to get my own page up, and you can follow my updates from my page. Thank you for watching. See you next week. Bye bye.